Good morning, everybody. Welcome to Saturday Morning Coffee. Saturday Morning Coffee with Paul, or Saturday Morning Coffee at DTS. I have not done this since the beginning. I just started doing this 2 months ago. It sounded like a good idea. One morning had some loose topics to talk about. Had a really big turnout. I don't know if that's because it's Saturday morning or because somebody liked the email that was sent. I don't know. And then I did again last month. Last month I was sitting here with no topics, and in the half hour before we started, I put together a bunch of topics, which isn't really the purpose of today because they're not even announced. But if I have a couple things to talk about, obviously I'll get the ball rolling with that. But it's kind of just a freewheeling morning of questions you may have or things that I think are pertinent. So while I was sitting here again, I did put a couple little things together, but very, very light stuff, like just 5 minutes of stuff. So we'll have plenty of time, and also that will ensure that we're done well before 10 o'clock because it's Saturday and we all want to get going with our days, including me. So I enjoy this because I don't do any prep for it at all. I just kind of sign in basically and see what we got. So I do have a couple pictures here. They're not even slides, it's not even educational, just in order to make a point, I wanted to show you a couple of pictures. So I'm going to start talking here. By the way, the email says access instead of password. Apparently, I confused a couple of people who emailed or called in and said they couldn't figure out what the password was. But email password is now called access. Do you know why that is? Anybody know why that is? Why that changed? When you own a multinational huge company such as I do, you have to be familiar with all the intricacies of business, and one of them is that a lot of email filtering machines don't like the word password because apparently it's spammy. I don't know why. I would think that if you're getting a password to something, it's the opposite of spam, but so it's recommended that you take the word password out of email. So just in an effort to make sure you all get your emails that you want rather than having it end up in the junk mail. So let's start off with this for fun. And when I little warning here when I show you this next picture, there's a couple of rules we have to have in trading, and that is that we focus on trading when we're in the trading room, when we're in discussions like this. I don't want obscure comments or arguments about sports, politics, or religion going on. It's always been a rule. We all want to focus on what the topic is at hand. So I show you this next picture. Understand this is not a political picture. I don't want any comments, but this is just simply something I thought was kind of funny. There it is, a cup of coffee. That's hysterical. No, that's not it. There it is. I'll give you 5 seconds to read that. I just thought it was kind of funny and appropriate. I'll tell you why in a minute. Because yesterday was, quite an interesting day, and a couple times a week to the members of the trading room, I'll send them a little note just with an educational comment or something. And yesterday was kind of a wild day. It's kind of the second topic I'll talk about the environment and that kind of thing. And what had happened was, if you weren't familiar, the market dropped quite a bit yesterday, and of course it was credited to a tweet from our president. And I did very well after that because of the fall of the market. I had several short positions that did very well, but it was, in all fairness, it was making up for probably the worst morning I had the entire year. So I ended up green for the day. But the reason I put that up here was it wasn't just for the very small amount of humor that's involved. It's because when I sent that, a couple people emailed me back, actually a few, and one came in the form of a question and a couple as a comment that may or may not have been sarcastic. And the general gist of it was, Paul, well, you talk about news and you say news doesn't matter. I mean, boy, here you are saying the news is what made the day. Well, again, no, I'm not saying anything incorrect, and what I say I stand by 110%, and I'll even triple down, as the expression is today, on what I say. But let me explain what I mean. Number one, there is always a knee-jerk reaction to anything that is said, right? If a number comes out, a good economic number, there's an immediate knee-jerk reaction. Almost everything today is a knee-jerk reaction, and the market may temporarily adjust to it, and then life goes on, and that includes some big things that you may not even consider to be little normal course of the moment things. What were knee-jerk reactions? Well, the 375 news items about tariffs were all knee-jerk reactions. There is no permanent effect to any one of them. When name them. I mean, just all the stuff, all the interest rate stuff, all knee-jerk reactions. There's never a permanent reaction to any one of them. The only time that news makes a permanent effect is when it is what? What type of news makes it where it actually would change the chart? In other words, the chart does what it does. News comes in, you get a little blip, and it gets totally overridden, just like a pothole in the road. Nobody cares minutes or hours later. But what type of news would actually, right, kind of, Gordon? It's called, hey, Carmen. It's what we call shock value. It's what we call shock value. In other words, the market has built into it. The market is the greatest future discounting mechanism in the world. In other words, it is built into it in anticipation of all kinds of future events. It's already built into the price. For example, terrorist acts, right? Now, I don't mean nuclear bomb terrorist act. We haven't had that. I mean, all the terrorist acts that we see, they have no effect on the market at all anymore, right? Zero. If you were to go back 15, 20 years, terrorist attacks would have an effect on the market because it wasn't built in as much. But the tariff talk started a year ago, and the market made its adjustments, which actually was nothing. And then ever since then, everything is just status quo. It's all built in. The only thing that would affect the market is something that is completely not anticipated, such as a 9/11 type thing, such as a nuclear weapon going off, such as something really, really, really extreme happening, something where the market, has to literally say, "Whoops, had my pants down there, didn't expect that," and everybody has to correct. But other than that, all this other stuff is built in. When I said, for example, that the tariff talk has had no effect on the market, some of you may be, whoa, what are you talking about? There was that day where they said something about tariffs and the market dropped, right? Let me pull up a chart here. We go back to here, right? The news credited that drop with tariff scares, right? Correct? And if you were to look at Google, the reason the market dropped that day, it's because blah, blah, blah tariffs. So what I did in an event a couple days after that, I read off the news about tariffs, right? And I read the news, President blah blah blah, Emperor of China blah 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 blah, and they decided this, and oh, bad news. And I asked everybody, bad news, and everybody said, yeah, terrible news. You know what the trick was that I told them, that I didn't tell them? The news event that I read them was from back in here. It was right in there. That was when the news event was. I tricked them. I changed the date. Do you understand what I'm saying? And it was the same article basically. It's just that down here, the market was being bought. Nobody cared about bad news on tariffs. Up here, the market needed to be sold, and it's waiting for any excuse. So it dropped. But I did this, and I'm not going to pull it up, but I did this chart before, that there were 13 major news announcements about tariffs, of which the first 9, the market rallied on all the bad news events. Does that make sense? Am I getting my point across? So I was short up here big time because the chart said to be short. Because the chart said to be short, not because. See, what happens is, let me show you this one. What causes does a match cause a fire? Does a match cause a fire? Yay or nay? Take a vote. Does a match cause a fire? Good answers. Can a match cause a fire? Right. It can, right? So, and this I think helps a lot of people. The match is a news thing, right? The match is a news thing that happens every day. We get news, right? If you throw a match onto a bucket of water, you get nothing, absolutely nothing. And that's the equivalent of throwing bad news on top of a market where the supply demand concept says we're still being bought. And naturally then, if the market is at a point, if the charts at a point where you can tell, which I said, and those of you that follow me know that I was standing on my head saying the market would not, right? Would 10 people please agree with me? So the rest of them, I was on my head saying that the market would not follow through on this new high, that it would be sold, correct? Clearly in type, in writing, across the board, everywhere. Because that's what the chart said, right? So now we have a bucket of gasoline, right, waiting for the bad news. So now we have this. So now the match works And everybody says, oh, matches are guaranteed to cause fire. Well, it's not the case. You need the gasoline there first, and that is the chart pattern, so to speak. So, in summary, sort of, I guess, that's all the slides I have, so don't worry. I threw those together at 5 minutes to 9. That's why I was 2 minutes late logging in. And by the way, if you've never read this one, again, one day, in an attempt to get this whole news thing across, I tried to. And the reason I've talked about this more lately is because we're just such a terribly newsy environment right now, right? Where there's just constantly news going off. And this is a different thing than we've had for many years. And that's what I want to chat a little bit out for the next 5 minutes, is just the environment we're in. So somebody says something, a news report comes out, blah, 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 there's a little reaction, and then the market goes back to what it was doing. Now, what you have to know is, of course, is what was the market doing? If it's bad news and the market was in the middle of just starting a rally, the bad news will get overridden in minutes or hours or the next day and will continue higher, right? Remember, even well, I'm not going to go through the other examples, but there's so many things that come out in the news that are touted as, wow, is this bad news? And the next day the market's higher and it's forgotten about. See, the reason it doesn't get sunk into your mind is if you don't study this, you never realize it. The commentators come out and say, oh my gosh, this is, boy, bad news, market dropped this morning, it dropped into the close today. The next day the market gaps up and keeps going. Nobody says a word about it. It's just quiet silence, and you never even think about it again. You never stop to think, gee, what about that terrible news thing yesterday? What happened to that? Oh, well, nobody cares today. Why does nobody care? Because there's more money that wants to come in and buy stocks. There's money than there is money ready to sell stocks. That's what it's all about. So you have the knee-jerk reaction and stuff. And if you get a chart pattern that agrees with what's going on, and by the way, did the chart pattern agree yesterday? Yeah, I was shorting yesterday. I felt that it was, again, time. The market was at a key level yesterday. I don't want to go down that road right now, but it was in a very, very key area. And I felt that it was time to be shorting. As a matter of fact, I started another long-term short position yesterday. So that's how I felt about things yesterday. So somebody says something, and it happens to line up with what needed to happen. Another way to think of it is think of it this way. What if you have long positions, day trading or long-term, it doesn't matter, and you're getting anxious to sell them, which we all get, right? You have some profit built in, you're coming into an area, you're not quite sure, and then don't you almost sometimes, some people don't, but don't you sometimes look for an excuse to sell? True? If you think back about it, don't you kind of say, maybe you're not looking for it, but when something happens, you go all of a sudden, oh, okay, I better get out of this, right? I mean, the extreme where it's almost a disease. I mean, I've had people in the room sometimes will have a great trade, and I don't really anymore, but I used to ask, okay, who held it the longest? And I'll have somebody say, oh, I got out with 3 cents profit. 3 cents? The thing moves 70 cents. How'd you get 3 cents? And they say, well, a little bit after we got in, I sold it because the market tanked. And the market tanked? And they're looking at one red bar on 1 minute on a 1 minute chart. This is somebody that's really, itching for an excuse to get out of something. But even a normal person, we have some profit built in. You start to analyze, maybe you have your rules where you're going to sell, maybe you're getting close to target, and you say, boy, you know what, I'm awful close. And then something happens. Somebody says, oh my gosh, interest rates, oh my gosh, tariffs, oh my gosh, war coming, and you say, you know what, let me just be safe and get out, right? So if you understand that, which many of you said, yeah, I understand that, that's what I do, you understand this concept that, a little spark in the right spot can make a difference. Yeah, well, obviously, one of the bad traits some people have is to overreact to anything rather than follow a plan of what to do. Because most of these, almost all these things don't really matter. That's why we look at charts, because these little news events will get overridden. So yesterday we had an event to me that lined up with the chart. So it had a reaction to it. So let's talk about that for a minute. The market environment we're in right now, and this is a great Saturday morning topic, right? Because I've, been doing this for longer than I care to say anymore. And I think this is probably the wildest environment I've ever seen. And I say that in a very guarded fashion because I don't want to, overemphasize it. But I think 1999 2000 was probably the craziest environment since that's when I started. So, that's the craziest time, right when I started. I don't really think 2008 was very crazy. I didn't think that was crazy at all. It was a rally. I was all over that perfectly. It was a rally. Clearly, we hit this top. The fall was going to be disastrous. The bottom was simple to find. I think 2008, 2009 was a piece of cake. I had the top and bottom of that like to the penny almost. Of course, not to the penny, but I thought that was easy. I thought 2016 was tricky. Let me get you back to charts here. If we're down here on a monthly chart, if I collapse that a little bit, that takes you back to 0, 0. So I thought 2008 was a piece of cake. What I thought was tricky, honestly, was 2016. I did it well, but I did not get that short from up here. I don't remember why. But then the next short I got and the long I got, it's everything through there was good. But I thought that was the trickiest time. And I think this is maybe the next trickiest time where we are right now exactly. And it's one of probably two times in the last decade that I said when we were right here, I said I didn't know where the top was, if we were going to roll over here or if we're going to retest the highs. And right here, we're in that same situation. I the first time since down here, I would be willing to be bullish over the top. Don't get confused about the article I put out about that being a failed breakout up here. Just because I said that would not go higher, it doesn't mean I'm bearish. My long-term picture, long-term monthly charts is still bullish. So I could be open to being bullish, and the line in the sand was to confirm above here, confirm, not just trade above there, but to confirm above there. I actually would go long midterm bullish. Right now, I've been midterm bearish ever since here. Ever since here, I've been midterm bearish for this and for more to come, I think. But big picture, and what I mean by that, I mean the monthly chart here, big picture. I don't think this is the top. You never hit a top on bad news. You always hit a top on an exuberant, accelerated move. We came close to it back, in May. Well, actually, we came close to it back in October here. If we would have gone up another 2 months, I mean, that might have done it actually, but it didn't. So, anyways, there's three time frames I look at. There's an intraday trading time frame because I like to trade intraday. And then there's a midterm time frame, which is weeks to months. And then there's the big picture. In other words, you're in it for years, and you're just saying, hey, I'd like to not get caught at the top holding everything. I just, after 5 years of being long, I'd like to get out or protect myself when we're at the top. So I don't think we're at the top, meaning on a monthly chart. That's the long. But just because you're bullish, big picture over years of time, why should you, if you can do something about it, why should you sit through this loss? Or why should you be buying longs that are underwater for months? You see what I'm saying? So I mean, I think what most of you trade is this midterm pattern, which could include swing trading. Again, I don't think swing trading is a good idea. But I think most people are involved in this midterm pattern with most of your stuff. I know some stuff you may have to hold on to for a longer time. But so why, even if you think we're going to go higher in a couple of years, why sit through this long? Or why be stupid enough to get in new longs and we're about to drop, right? Why not know to exit what you can and to actually short stuff through this period of time? Why not know to get long again and now get long and then know to sell and then know to get long again? That's what I mean by the midterm versus the long term. So the letter I do is called the long-term trader, but it says right under the subtitle for long-term and midterm positions. Because right now, the long term is not real playable. In other words, you're still bullish on the long term, but very difficult to say it's time to get into something that you'd expect to hold for months or years. Because this was the period of time for that. This was the sweet spot, number one, and then after 2016, number two. Now we're in a jumpy time where you have to play what I think is going to be a long sideways pattern. Does that make sense, Gordon? So if we're going to be sideways, you want to be kind of buying the bottom, selling the top, not expecting forever moves. So that's why this is so important to me. Because like if you just, in other words, if you just decided, I'm just a laid back trader, I'm going to jump in long right here, on this little breakout. Well, for a year, you're flat. Didn't make any money, right? Because you could have made a ton of money. You could have taken it up, you could have shorted, you could have taken it back up again. So by by getting the tops and bottoms of the market, or at least getting close to them, you can, do a lot better with your money. And yes, you can do that. And people, yeah, confirm. Well, Carmen, you're in class, so you know what confirm means. It means a secondary sign of strength or weakness on the appropriate time frame would be your answer because you're in class. It means that if this was my, where's the daily chart? If this was my point, I decided to go long, Carmen. If I decided that, over all these highs right here, I would go long. If you run from 188 to 190 continuously one morning and you trade above that by a penny, that's not, some people would say, oh, Paul, you said if you break above that. Well, no, that's what I mean. Not break above it, but to confirm above it. It means you have to make a significant break above it, have selling come in, have the bears test that area and say, no, you're not going higher, and then have the bulls plow through a second time. That's what confirm means. It means you've tested the bears. Because anytime, well, it's the opposite of whack-a-mole, right? You all know what whack-a-mole means, right? You stick your head up and you get chopped off, right? All right. So, so I started babbling here. Reg and the Q's technically a downtrend, but the weekly is still an the Q's daily downtrend. Technically, the Qs are sideways on the daily. But again, this is all just semantics, Reg, because it's how you define a trend, and what matters is what you do with it, right? I mean, especially on the short side, you can't wait for a daily downtrend to get short, because if you do, most of the time you've missed 75% of the move, right? You've studied the market for a long time, correct? If you wait for a daily downtrend, you've probably missed most of the move already, right? So we have to be smarter than just saying what a daily down, but technically speaking, the daily is not in a downtrend, it's sideways right now. And the weekly is in an uptrend, period. Period. The monthly is in an uptrend, period. True, true. Well, the problem is, Reg, is that when you start to drop, you often drop so quickly that it becomes difficult. And by the time you actually get an established daily downtrend, you could be down a lot at that point. My point is, I want to be in before that. You have to see the signs of things breaking down and when that happens to me. Because in others, yeah, you see, here's the problem, Reg. Like even right now, you wouldn't be allowed to even play a daily downtrend according, to my rules, according to the language of charts by me, because the monthly's in an uptrend, the weekly's in an uptrend, right? You can't play long term a position that completely contradicts the other time frames. Now, if you call that a weekly retest of the prior high, which is what it's turning out to be, then you could call that a resistance area and start shorting off of there, which is what I actually did. So again, sometimes, and this is what I mean about making money versus just having a basic understanding of charts. Not that I know you have a very high understanding, Reg, but just for everyone else, to have a basic understanding of charts and to say, blah, blah, downtrend, blah, blah, uptrend, it's hard to make money that way because you have to take the next step beyond that because it's wonderful. Somebody will show you a chart like from this, we saw on charts, yeah, from, you look at this rally through here, and then it's great, and they show you, boy, you just do this on the uptrend and blah, 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 and it's great, it works great. But the problem is all these people now are getting killed because they don't know what to do in here. So if you're a one-trick pony, you make your money on the one trick, and then you don't know what to do, right? No, well, actually, that's exactly what I was going to get into a little bit. So number one, let me say this. As I say that the market is probably more volatile than I've ever seen it. Number one thing is that is never, ever, ever an excuse. It can be the reason sometimes, and again, understanding the difference in those terms, meaning you can never say, well, this isn't my fault, the market's crazy. No, we have the ability to see the market, see it's crazy, do what we need to do, adjust or not trade at all. As a day trader, it has, to me, less effect. Now, just, to be fair, yesterday morning, the market volatility got me. Now, that's not my excuse. I'm not saying, gee, uh, anybody would have done that. I did something wrong. I didn't do anything wrong, but I didn't have it right yesterday morning, and I had a tough morning, right? I ended up coming back and turning green. But that's not the way to do it. It's not something I'm proud about doing that. You just want to get it right all the time, always be safe, always be good. That's what you want to do. But there are times that you may get it wrong because something the charts are just wider. You hit areas and you kind of plow through them a little bit rather than sticking at them or whatever the case is. And that's what it was yesterday. There was a point I thought, okay, definitely time to be short, and we plowed through one more time. So it's not so, but as a day trader, the advantage you have here. Let me back up on stuff for a lot of you who don't know me. My biggest concept to me that I feel I get the biggest edge from is having a great understanding of where the market's going, but then not trading the market directly. I only trade the market about once every couple of weeks, maybe once a week. But rather than trade the market, because if you trade the market and you're wrong by one tick, you're out, right? Yeah, I understand things you can do, but I mean, just generally speaking, if you get it a little bit off, you're out. What I like to do is to take the market and use it as what I call a bias, to say, okay, when the market rallies to this area, I want to be short. But rather than shorting the market, I'm going to look for what? Right. Stocks that have setups that I think, right, give me the best opportunity for when the market moves down. Because that way, let's say I'm a little bit off on the market top. Maybe the market goes a little higher. Well, maybe my stock won't stop out because it's weak and it's just sitting there, right? Or whatever the case is. So that's a big overriding concept for me, is to use the market as a bias and then use equities to have that what I call padding. That if the market does drop, maybe my stock drops more proportionally. If my timing's off, maybe the stock survives anyhow. So as a day trader, you have more opportunity to do that because we have more stocks that are on their own page on an intraday basis, meaning they kind of do their own thing, because some stocks gap, they get news, things do their own thing for a couple days at a time. Does that make sense, everyone? So as a good day trader, does that make sense? So as a good day trader, none of this should really matter. Now, it can sometimes, you can still, get get caught in something, but it's my fault if I do, because I know what's going on, I see what's going on, you have to adjust. So as a day trader, I think have less, you have more control over what's going on, even in a whippier environment or whatever. As a long-term trader, the problem is that you don't have that uniqueness so much. And I'm still, 100% do the same thing long term. We come to an area, I think the market is time to top out. I look for shorts that I think are good. When the market falls, I think we're near a bottom. I look for the stocks that are best to go long with to try and get that padding in there. So nothing changes. You still do what you do. And I think both long and short-term plays are still very, very valid. I just think that on the long term, you you never have as much of an advantage finding unique things, because things don't stay unique for months or for weeks. Sometimes they do, but it's very rare. You don't get that unique pattern. It happens for a few days where you get true uniqueness, and then it kind of falls back into place. So you just can't rely on it as much, and you are more bound to what the market's going to do for market type stocks. And then what we have now, of course, is some of the other sectors that don't necessarily follow the market, they're really goofy. I mean, gold, oil, they're just really doing their own thing. They're not counter market, they're not with the market, they're just doing their own thing. So, to try and trade those, you lose a little bit of that. It used to be years ago that gold was very counter market. And if the market fell and gold didn't rally a proportionate amount, you'd want to short gold because it had relative weakness. It's rallying, but it had relative weakness because it should be rallying a lot when the market drops. And that relationship doesn't exist anymore. The gold just does what it does. And same thing with oil. So, there's some little things that change from time to time. But again, it's none of it changes when you consider that you look at charts and read these patterns. That's why I'm saying these things to you, just from looking at charts. Sorry, I just bumped my mic there. So let me grab a couple of your questions that I know you have. And matter of fact, it's pretty much time for questions. I mean, that's just what I want to go over with you guys, is just I think the biggest point today is right now, yeah, we're more stuff going on in the market, wider patterns, a little more volatile, uh, more things. There's always stuff going on, but I think we're seeing more knee-jerk stuff because we have more immediate news coming out and more topics out there that people care about. But the truth of it is that it's just the pattern we're in. It has people jumpy. So you see selling, you see buying, and I don't think bottom line it's a big deal. You just have to adjust to what's going on. But for what it's worth, this is probably, and I say this one more time, and I don't say it for the purpose of discouraging anybody. Quite the contrary. This is probably a more volatile time, and that can be a good thing. You just have to adjust to it and recognize it and realize what's going on. The trick on the long term pattern for me is that I like to take really aggressive entries on the long term, which means that I may get them wrong a couple times. I literally have been doing entries that come from the weekly chart, and I'm taking them off the hourly chart. So that's a double zoom down. And when you do that, of course, it means that you could get it wrong sometimes. But when you get it right, most of my targets, well, the last trade averaged out to be about 4 hours, 5 hours. You get some bigger moves, and you get some more money from them. And that means finding a precise area. And the problem is finding precise areas is more difficult. Is much more difficult because you don't have the precision. Let me follow up with one other point, and then I'll grab your questions there. We have to trade whatever's thrown at us, and we can, and that's not a problem. In a perfect world, what I prefer is boring precision. Boring precision. Let me show you what I mean by boring precision. The first trade I did yesterday, intraday, was Teva. It turned out to be a great trade. It lasted all day. Lasted all day. But this is what I mean by precision. Let me make this a 15-minute chart down here. So you have an hourly, a daily, a weekly, and then this 15 I'll change. But yesterday I shorted Teva just a couple minutes after the open on, let's go to a 2-minute chart. On this, well, it's 5-minute chart. On this rally up into this prior area, I shorted Teva. On this rally up into here. Why? Well, because the daily chart was in an area, the hourly chart already had a lower high in place. This is stuff I look for. So I know at this point, any rallies into resistance should get sold. So I like to short the rallies. And it was actually short at 727 right up in here. It fell all day. See, this is precision to me. You can come in here. I know you guys have a lot of questions. I'm going to spend the rest of the time just answering your questions. But this is kind of the summary I wanted to say in my little comments here was that precision is what I like to see. This is what I look for, is precision. You have an area, you say, you know what? I'm running up into this area, and there's no way I'm getting through that. Short it. Boom. Stop over the top somewhere. Watch it drop all day. The back 2/3 of this trade, I took into the close. So it was a great trade. Now, again, don't get me wrong. And actually, the trade after that, I don't normally do this, but I went for the home run, and this is TPR. I shorted TPR up in here, and it stopped me out by a couple cents. And I went for the home run, meaning I used a tight stop, which I don't normally do. And this was a 6.5-hour trade. I mean, this is a whole week's worth of profits if I walked away from it. I wasn't in this one. So that's what I mean by precision, though, is being able to have chart patterns. And some people call them boring. And some people say, well, oh, gee, a new person, typically new people will say, I hope nobody typed this, I haven't looked at your comments, but typically new people will say, oh, these are huge moves on the chart, this should be easy to trade. Well, the huge move is directly 100% counteracted by what, everybody? What's the huge move counteracted by? Which neutralizes it. Right, Eric, there's Eric again. The size of the stop, or in other words, you don't end up making any more money. I mean, if I can get into Teva with a 15-cent stop that I'm willing to bet my right arm is going to hold, well, guess what? 45 cents makes a ton of money. And you say, boy, okay, now stock XYZ moved twice as much. It moved $1. Okay, but if I need a 50-cent stop to capture the entry area because it's so wild, I'm not making any more money, right? So precision's the best. That's what I always try and look for. When you're trading the long term, I think on the long term pattern, my point was on the long term pattern, you have to incorporate the market more to me because you're not going to get things moving for weeks without the market. And to incorporate the market with precision right now is difficult because of this. The concept to me, though, was when we built up this wall here, there's the wall for the market, be short until proven wrong. And I only have two long-term positions. So I'm not as prepared as I wanted to be, but at least I got a couple. And one of them is already at target. It's just short of a target because I started it a while back. All right, so let me get your comments here. I have to go back a ways. And okay, I was back with Reg and the monthly downtrend. So MM. Okay, I answered MM's question. Does it mean better to day trade? I hope I answered that. Reg, by the way, I thought it was defined. I guess it's really not quite a daily downtrend. But well, again, Reg, it depends what your definition is. I mean, you've been in class with me. My definition is I don't want to get into the definition of the whole thing right now. But again, it's kind of a moot point. It's academic. You know, the point is, what are you doing with it? I'm already short two things, big picture, and it's a tentative area. But I mean, yeah, it's there's times where the charts are do that and they're precise and nice, and there's times where you have to get in there and kind of battle a little bit. Efron, what are the most important parameters you look at to tell you whether the market has topped or bottom? Efron, I mean, yeah, I'll give you two answers. I'll give you a couple of answers, but I mean, the real answer is that to fully understand the answer, it's a huge answer. It would take me hours to go through the whole. Well, I shouldn't say that, but I just mean the key things are just the overall understanding of the chart pattern, Efron. It's understanding where support and resistance is, how far we've gone to it, and when I say understanding support and resistance, we have the chart up here. What I mean by that, Efron, is understanding that this right there is not trading above resistance, is not trading above resistance. Because resistance encompasses much more than just looking to the left and saying, oh, I'm above that. It's how you get there is part of the equation. That's what nobody ever looks at when I talk to people about support and resistance. And again, it's one of my themes I talk about a lot is just that so many people don't really understand technical analysis and say it doesn't work. They'll say, oh, here's a breakout that failed. How are you supposed to trade? Well, no, it's not a breakout, and no, it didn't fail. And yeah, I would short that because it's not a breakout. Because the issue there, and again, it's not a matter of did we clear that number to the penny? Did we clear it by a dime? Did we clear it by 50 cents? Did we clear it twice? The issue is that we have no power to continue higher because how we got there is incorrect. So what was your exact question about the parameters? So the most important parameter, Efron, is understanding chart patterns on multiple time frames, understanding how the daily interacts with the weekly, with the monthly for long-term stuff, and understanding what support and resistance means, and then how. Again, I just call it the language of charts. It's kind of the reaction to things. When we try to go to a new high, how is it received? I don't believe you should ever look at or try to understand or read news, but the general laid back concept to say that good news can't move the market higher is interesting. Because in a bullish market, bad news is good news and good news is great news. In a bearish market, good news is bad news and bad news is terrible news. Is that a good start for an answer for you, Efren? If you could only trade one stock, which one? Hey, Jim, that's a great question. One stock for a month. I would trade, right now, I would trade Intel. That was off the top of my head. I never thought about it. Why? Again, if I could only trade one stock, I wouldn't want it to be the market because then I lose the concept of relative strength of weakness and market timing and all that good stuff. Intel has a significantly weaker pattern in the market right now, right? So number one, I have a bearish bias on Intel anytime it moves. So I have a bias on Intel. Number two, it's a very liquid stock to trade. I mean, I assume that's part of the equation you're talking about. There's only a couple hundred stocks that you can trade pretty easily the opening minutes of the day if you want to do that. Because a lot of even some of the more liquid ones don't always open all that nicely trading Intel. You can pick up whatever you want whenever you want. And it usually holds pretty true chart patterns. It's not goofy crazy. So that'd be my answer. And I didn't contemplate that until you asked the question, so it was a rather spontaneous answer. I may change it at some point, right, Jim? Oh, Gordon, you're talking about when Mars aligns to Jupiter. Back when I lived in Chicago, on was it Channel 26? Maybe somebody could help me out with this. there was a station that literally they had a market show and it revolved around, yeah, the planetary alignments, yeah. I actually thought it was embarrassing, but it actually was a show on TV. It was in one of the oddball stations. But yesterday, market drop happened around when you said the market needs to drop. How far? No, saying correct. I think saying you're saying, okay, we're in an area you expected the market to drop. Whatever reason it starts to drop, how do you know how far it's going to drop? I don't know. And it's one of the reasons I like playing stocks. Saying right. I think you were around. I had, you know, um, several short positions. And what I do is I temper it by starting to trail parts of each position. So anytime the market comes into an area where I say, here's the cues, anytime the market comes into an area, like we have this huge drop, and I say, wow, is that going to be the bottom right here? You see where I'm pointing? I'll trail part of a couple of positions. And that way, and I just take it like pivot by pivot. And then we can put in a top here, and guess what? As we put in a top here, my stocks usually put in tops. So then I bring the stop down on my stocks to their corresponding areas. So I don't know. I had no idea we were going to drop this much yesterday. Of course not. I can't tell you I did. All I know is that I was making money and I was trailing and I continued to do that into the close. And I ended up with three positions into the close. It was a little hectic actually. I ended up with three positions, not full, but partial positions into the close. Does that answer your question, Sam? Just kidding, of course. Do you have to sit there and wait? Right, Reg is a good commentary. You do have to sit. I think that's even my comments, Reg. I'm not sure. You have to sit like a hunter in a blind waiting for the setup. That's exactly correct. What Reg just said there at 9:40, that's a great comment. I think it's a quote from me. I'm not really sure, but it's exactly correct. Well, I mean, you say sounds like a better approach to sit on cash, do not trade. Well, naturally, your comfort level in the market is always going to dictate how invested you are, right? You should be invested from, a minimal amount 10 or 20% up to 100%, depending upon what the environment is. Yeah, that's a decision you have to make based on how much money you have in the market compared to all your other assets. That starts to become like a financial planner type question, which maybe you handle yourself. But if you have a small part of your money in stocks, if you're talking long term, I assume, naturally day trading, we don't care. Day trading, it's pedal to the metal every day. But as far, well, pedal to the metal days are different day trading. We have good setups, bad setups, but it doesn't revolve around the overall whippy environment. Some days we have great setups, some days we don't, but that's true every day of every year since the beginning of time. Long term, if you have a very small amount in stocks, you probably stay fully invested, I'd imagine. But if you have a big part of your money in stocks, then you have to temper how much you have invested at the time, right? It's just kind of common sense. Zooming down a lot implies position size too large. Well, no, Jay, no. I'm still using an hourly chart, Jay. So we're still having stops that, well, like for example, the stop I just set up was going to be about a buck and a half instead of a $4 stop. So it naturally, yeah. I mean, if you're in doing your, but everything I've been doing has been comfortable. But it's true. I mean, you could end up with a stop so small that you have to temper your size because you don't want to hold them much overnight. But none of these are that crazy. I'm talking about still using a wide hourly chart for entries. So we're still talking about significant stop. But it depends on the stock too. A lot of stocks are are volatile enough that it makes the stop wide enough. Where you have to be careful is something like an IBM, where you have a $150 stock, and you could literally find a 20-cent stop sometimes to hold overnight, and that's where you can get a lot of trouble. But no, everything I'm doing is not an issue for that really. It depends on every setup, Jay. It just depends on the setup. But yeah, I understand what you're saying. You may have to temper your overnight size, but no, the way I'm doing it is it's not an issue. It's just I don't want to. You come down to a weekly chart, and you end up with a $5 stock and something that moves $6 is not making any money. So I want to I like to get in there. The first nice big move, you take some of your money off the table, and then you let the rest go, so that if you have that 9 month debacle, you're killing it. You're just killing it. To me, it makes sense, and this may not make sense to you, but um, if I can get short of what I think is a high, and market drops a little but never goes anywhere and then goes higher eventually. If I get out of that break even, was it really a break even, or did I really have something. In other words, I get in some shorts, market drops a little, but it isn't the big drop. I make some money, trail out of some, I break even. Is that good or bad? Forget about playing the long side. I just mean for the move that you had, you thought you were going to have a big move to the downside. You get in, you break even. Is that good? Bad? See, yeah, right. It's a big win. It's huge. It's great because no, it's great because if the market did drop, I'm going to make a killing because I have all my positions from the top. You see what I'm saying? And the problem is guys, when you start dropping, it's very hard to get short. I've been there. It's very hard because you look above you and you've already dropped this huge amount. You go, well, where's my stop and where am I going to? So to be able to have like a free bet is what it is. It's just like a free bet, you know. Even if you bet on the worst team in football to be bet the best team in football, if it's free, who cares? You know, it's a free shot at it. So I think it's huge to position yourself in such a way that you're going to kill it if the market does move. And if it doesn't move, you get out of it for free. That's what I call perfect trading. I'm not sure that makes sense with all of you, but Alex, hi. Being new to your room, would mythologies you speak of be best understood by taking one or both? If you want to understand the methods, absolutely, Alex. Yeah. I mean, without question, to understand the method. Yeah. Now, some people just like to come and just do the trades. They don't care, you know, why or how. Some people like to come and see what I want to do and temper with what they want to do and take the best out of both worlds, which is what I think the best position to be in is to know what you're doing, understand what you're doing, whether it's through me or however you learned, and then to take the best of both worlds. But if you want to understand, yeah, the room, while I do discuss the strategy, Alex, the purpose of the room is not to teach it because that takes 3 full Saturdays to understand everything. And it also takes you at least 2 repeats to begin to really understand it. It's not that it's complicated, folks. It's just that it takes that repetition. And it's not hard, it's not difficult to learn. But yeah, there's a lot more to understanding technical analysis than people think. It's simple to learn, but there's a lot more there than people do. So yes, I mean you'll never fully embrace everything unless you go through it. And you don't have to. That's up to you. But yes, you would be shocked at what you learn in class. Yes. Carmen, you said why, but sorry, I was way behind on the screen, so hopefully I answered it. Hey, Minez, how you doing? You are correct. Minez has a comment that is correct. It's 90% your mindset. You have to understand what you're doing. You have to understand charts. You have to understand language of charts, but that's not hard to do. After that, it becomes largely a game with yourself, so to speak. You are correct. Oh, TPR, I did it with a dime stop. My stop, I took it under 21, stop 21.10. I thought, again, I announced this is my home run play. I was just going to do it, close my eyes. It would have been 6 hours if it went up a little bit above that. Yeah, I did. It's not what I normally do, Peter. It's not my normal trade. It was different. It was going for the home run on purpose. Do you look? Yes, Jim. If you want to take a look on the website on the free stuff page, the last bookmark on the market discusses, Jim, how I do use sectors for bigger term market timing. Yes, I do. I think it's probably one of the more important tools, again, for big picture, not day to day. Well, we use it day to day for finding day trade, swing trades, where the money's flowing. But I mean, it can help you find big tops. So rather than go through the whole thing, Jim, there's a good discussion about it in Bookmark on the Market 3 on the website, on the free stuff page, okay? You guys all know where it is. By the way, we did a little work kind of cleaning up that free stuff page. The videos on the free stuff page now are going to remain on the page. They're built into the page, so you're not going to get sent to YouTube. Still posting on YouTube, maintaining that. But for those of you who want to see, I know it's annoying sometimes to get sent to YouTube. So most of the videos now, and all of them will be soon, you stay on the web page. So it's kind of cooler the way it's set up right now. When you click on a video, you can watch it real small, or you can expand it, and when you go back, so you can quickly hop from video to video, which I think you really like. So those of you that have not been to the free stuff page, or if you've been there but you felt it annoying because the videos send you to YouTube, they no longer send you to YouTube. Thanks, Gordon. That's why I'm here. We're going to wind this up here. Carmen, can you call a couple of other liquid stocks that usually do not flow? Well, that do not flow with the market? Well, gold and oil are the big ones, Carmen, that are, always weird. And then it depends from month to month. Some that other things do. But nothing else really stands out to me as something that's completely independent. And yeah, that's why you have to be careful, Carmen. Like we discussed in class, you're in class with me. When you talk about that section on relative strength, relative weakness, and market timing, you have to be careful that you're not getting tricked by looking at something that doesn't have relative strength or weakness, like gold and oil. But the best way to tell, Carmen, is just pull out a daily chart of whatever sector you have in question and compare it to the market and see. Naturally, it may be stronger or weaker, but is it generally following the highs and lows of the market, or is it just doing its own thing? That's the easiest way to tell. Okay, Reg, Alex, Paul's the best, blah, 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 blah. Thank you, Reg. Appreciate that. Your check's in the mail. Eric, question. Eric, you never have questions. You have answers all the time. I would have expected you to add a long-term sure on Tuesday, but you wait till Friday. Ah, Eric, great question, Eric. Great question. Eric gets a long-term trader, and I kind of keep him updated, and I sent something out Monday saying basically what I say Monday, saying I'm looking, right? I'm looking really hard. I'm waiting for confirmation. And this is tough, Eric. It was tough. So Friday, why not Tuesday? Yeah, the reason Friday, Thursday, Wednesday, Tuesday. Why not Tuesday? It was a close call, Eric, but just because we held all this area, what I wanted to do was that next morning. If we open weak, I had a couple stocks, and actually it wasn't going to be the one I ended up picking, but if we open weak, any stock, that opened and then shorted under the priorities close. But we ended up gapping up so much that all came off. Yeah. So I just didn't think it came down to being this close, Eric. It turned out to be that I didn't feel it made sense to do it into close this day because we weren't really that weak yet. I mean, big picture, you're still strong. You have this unfilled gap, and we just, I think it was a necessary sell-off, so it wasn't weak enough to do it. But from there, if we opened strong, moved up, then under here would have been the place. Tony said the market was in a critical area once over below either one. Yes, I think so at this point. Of course, the bullish concept is gone for right now. That's still the line in the sand. But yes, had we gone over this, if we would have plowed above this, I would have actually been long term, yeah. Because now the weekly chart will sustain a move higher if it was going to go higher. It also will sustain a move lower, but it's tricky, like I said. This is a very tricky area. And again, that's why I want to have great entries so that if we, in my concept, I said, guys, back here, no, back here, last May, right? You can look it up. Last May, I said that I expected that we're going to be in a bigger picture sideways weekly chart for a period of time, a long period of time, right? Anybody who follows me enough to remember that? It's in the videos. It's in this thing. I said May when I shorted that, I said we're going to be in a long-term sideways pattern. It looks like still what we're going to be, but how we react to here, whether the sideways ends up being here to here, or whether I still think we end up in a wide pattern. Diego, is better to the SPY just because of this large changes? You mean the SPY instead, Diego? You're there, the SPY instead of the QQQ? You mean? Is that what you're referring to? Because of the large changes. I'm not sure what you mean by the large changes. It doesn't matter which you trade. It doesn't matter at all, Diego. You can trade whichever one you want. I'm not sure what you mean by the large changes, though. I mean, they both trade lockstep. It's the same chart, same pattern. Doesn't matter. I'm going to go on while you answer there. Carmen, you had a comment. It was just a comment, not a question about subjective. Jay, to see the free advice, I would put chart reader trader video. Oh, Jay, okay. Jay is saying that on the free stuff page, there's a prior event called From Chart Reader to Trader. And Jay, you're right. To me, that is one of the biggest. It's one I refer to a lot for people. Yeah, I do think that is one of the best videos out there. Yeah. Hey, you know what I might do, Jay? You know what I'm going to do? You just gave me a great idea. Jay Kaching, you just gave me a great idea. I think we'll feature a past event of the month, like on the homepage, kind of. Favorite past, because I have so many of them now. And a lot of them are going to the archives page. By the way, all the events are still out there since the beginning of time. It's just that if you look to keep the free stuff page cleaner, the more recent ones are there, and then you have to click. But you go to the archives page, they're all there still. The archives page still refers you back to YouTube. It'll stay that way, but okay. Great idea, Jay. Paul, any suggestions on how to deal with the sudden drops for Friday was dear friend. Well, Peter, you don't have to have them. When the sudden move lines up with the chart pattern, which to me it did yesterday. I mean, guys, look at the chart pattern yesterday. I just want you to see this. I mean, I want you to understand something. The thing I just gave you about this, the match in the water and the gasoline. Peter's asking, is caught off guard, and you're right. If you're just cruising along down Main Street and boom, this bomb drops on you, you're not ready for it. But I was dying to short anyhow. Again, so to me, this match, whatever it was dropped onto a market that was absolutely needing to sell off. Look at the chart again. To me, this is huge. Where's Eric? Eric, give me a yeah, absolutely. Right, we have this multiple top high. We roll over with a lower high. There's your lower high on the hourly chart. We test these areas down here, and then here's intraday, here's the 15. We rally back right into this area. I mean, again, the people who needed to sell are going to be selling in here. The people that want to short are going to be shorting there. So, I mean, this was an area to roll over anyhow. Now, naturally, this happened because of the spark that was thrown on it. But there's no doubt in my mind we would have rolled over. Now, we wouldn't have had the biggest red bar in the chart, in months, of course. But we would have rolled over, tested the low, something. That's just what the chart was doing. So when this happens and it lines up with what you're doing, great. Sometimes the knee jerk goes the other way and then it doesn't last very long. In other words, if the tweet would have been if the tweet would have been great news, I suspect we would have seen a pop that would have then faded away. You see what I'm saying? Because it contradicted the chart pattern. And it's not the best example because it really isn't the most bearish thing the way that's set up if it would have done that. But you get the idea, right? Bookmark on the market 4 is coming, Tony. Yes, it is. Well, Diego, the SPY is the same range as the Qs does, if that was what you're saying. The SPY and the Q trade the same. It's the same ranges. Do you have any expectation around where the market has to visit on the move down? Well, there's one or two things going to happen, Gordon, and I can't predict which one. But any continued weakness beyond today, and I think it's inevitable that we test this area down here. I don't see how that would not happen. Now, what could happen tomorrow is that we in one day reached the first support area. So we now have technically reached an area. It doesn't matter how we got here, why we got here, whether we got here by a Ferrari car or on a pogo stick, we got here. So now if we were to gap up and be bullish tomorrow, we could come back and stay in a sideways pattern in here. This could become a sideways pattern for a while. So I want to see confirmation under the low, and that's going to be very tricky on Monday because if we gap down, it doesn't mean to be bearish necessarily. You got to see some rally come in that gets squashed. So, but I think the answer to your question is that 170 area should be tested unless Monday just reverses today. Now, as a day trader, you don't care. You play whatever happens on a Monday, right? Because I know some of you are saying, well, gee, how do you know? Well, you don't. We don't care as a day trader. You play whatever happens. As a long-term trader, again, I'm taking positions that I am hoping that if we do have some kind of comeback in here, my position still lives. Because the market would have to get like over here for that to go out. And again, it's not flawless. It doesn't always work that way, but that's how you build into some of these. Today's session will be on the free stuff page, yeah. By the way, the last two events I thought were exceptional myself, for whatever that means. One of them was strategy versus speculation, was 2 back, and then what to look for was the last one. What to look for will be posted out there this weekend. If you miss those, I thought they'd be good listens. Diego, how do you manage the fact that when looking for those candles, I was trying to find a climactic move, I kept thinking about the reverse. How do you manage the fact that when looking at those candles, I was trying to find a climactic move? Well, I'm not sure what spot you're talking about, Diego, but I mean, things don't always reverse only on climactic. Matter of fact, climactic moves are the small minority of the time. Things don't always, when you have a kind of a climactic move into an area, that's great, but you don't always have that. Most of the time you don't. Most of the time you just roll over in an area for what appears to be no apparent reason. So I'm not sure what your question is really there. You handle it by understanding all aspects of the chart and not only looking for a climactic move to an area, because you'll miss most all the moves if you wait for that. Okay? All right, I'm down to the bottom finally. Last call for any questions. Thanks. Enjoy the rest of your Saturday. Hope you enjoyed your coffee. We'll see you guys. I see you next. Probably see some of you Monday night, or see some of you in the room on Monday. Take care, guys.